please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, really all over the place. That weekly options expiry day, there's just a bit of a pullback, but that's been sold into on the Nifty bank. On the Nifty, once again back below 11,235 thereabout. We went to 11,250, but slipped again from there. Short point is the market is weak and every bounce is being sold into. Ashwani and Mitesh with us for BTST calls. Ashwani, you go first. Today has been a rank bad day. For the bulls, that is. All bounces being sold into. Thoughts on the index and what about individual stocks?
See, there's no point saying that it's a bad day of bulls. You shouldn't be a bull at this point. And that's clearly established by the market action that even this small rally of 20 points has been sold into. I think the momentum is likely to increase from here. And, now the market has totally lost confidence and even 20-point rallies will not sustain till obviously there is total capitulation. I don't think capitulation is quite here. As far as individual stocks are concerned, Yes Bank is a sell with a stop of 322, target of 306. RBL is a sell with a stop of 595, target of 578. And Coal India is a buy with a stop of 274, target of 288.
Okay, all right. So that's two sells and one buy coming in from Ashwani. Mitesh, not looking good. I mean, the screen, if you're a bull again. What are your trades for the last half hour?
Yeah, so I still have one buy and one sell. So we think a couple of names on individual basis I'm still okay trading on the long side. That's one of them is Mindtree. I think it's just bounced back from 1105. That's a good area to buy. Keep a stop 1088. Look for targets of 1135. And IRB is a sell. Keep a stop at 170.5. Look for targets of 155.
Okay, fair enough. Just intraday chart of Bajaj Finance is very interesting. And Amrish, I wanted your thoughts on this because there was a time when people used to wait for 2-3% drop in Bajaj Finance.
Right.
It's now dropped from 3,000 to 2,500. It's a rather sharp correction that we're talking about, almost 17% now on Bajaj Finance. What's gone wrong, or do you think it's just normal routine correction?
No, I don't think this is routine correction because we have seen this stock moving up for a very long time. It had become quite expensive. And especially in the last, say about 9 to 12 months, we have also seen competition really increasing in that space. Newer NBFCs or NBFCs introducing the similar products. And because of that, we have also seen that possibly the asset quality would deteriorate going ahead. We may not see this now, but maybe in the next 12 to 15 months, you would see that the asset quality of these NBFCs have started deteriorating. And the sort of valuations they've been, getting since the last, especially two to 2.5 years, I think was too expensive. And I think it was overdue. And at the same time, like I've been saying in the past also, the PSU banks, you will see the consolidation happening going ahead. And they were not actually in that space in the last 3 to 4 years, because of which most of these NBFCs had gained. Now, I think that would, start reversing over the next 3 or 4 quarters. So I think if you look at that balancing act happening, you'll have, most of the NBFCs which have done well in the past 2 to 3 years will start correcting, and I think this is just the beginning of the correction.
Beginning of the correction. Well, it's been in the making for a while, Anuj, but your thoughts on today. Really, is this sort of a bus that's kind of left the bus stop, so there's no point running after it right now? I'm talking about the way the market's behaved today as well. Yeah,
Surabhi, in the morning, my thought process was that if there was to be a short covering bounce, it was to be today. It did play out for first half an hour, 1 hour thereabout. I think we had at one point Nifty rally, but the way that's been sold into is rather disappointing for the bulls, because it's telling you that the market texture is weak. Now, if you're talking about levels, we have corrected from 11,700 thereabout, more than half of the recent move. So, the low was broken yesterday on a closing basis. Today you've broken the intraday low. Let's say 11,200, 250 perhaps remains the last bit of bastion. But this piece is now very very positively or very inversely rather correlated to Brent and dollar rupee. So that equation, I think, is every day changing in favor of the bears once again. In fact, if you see the dollar rupee chart, once again, we're making a move towards 73, 72, 75 is what you have. So this is a bit of a macro headwind that we have, that the market has to contend with. But anyway, let's talk about some more stocks before we move on to our next guest. Amrish, before we thank you, I just wanted your thoughts on a stock like Jubilant Food, because it looked like it's put the correction behind it, but clearly not the case. Decline again today.
Yeah, but this is one stock where, I mean, I would say that if you see further declines, should be possibly an opportunity to start buying again. Because we have clearly seen a change after the change in the top management. We have seen, I mean, the complete business model for this company shift. So I think in case you see another 100, 150 rupee drop from here because of the markets, I think it's a good opportunity to start buying.
Okay. Ashwani, I wanted your thoughts also on Bajaj Finance and the way it's corrected $500 from the highs from 3,000 to 2,500.
See, the bigger the rally, the bigger the correction. This leg of the rally started, I think, from 1,600 thereabouts. 1,600 to 3,000. Take even 50% of that. That leads to $800, which is about 2,200. Again, very near the 200-day moving average. You know, these sort of corrections will happen once a stock goes from, I think, demonetization time it was 500. 500 went to 3,000. So corrections will also be similar. You will go through down cycles and up cycles. People who are able to hold on to the down cycle will finally see up cycle also. The cost of capital is going up. These are all cost of capital heroes. Once that comes back, I think that is the time when these stocks will, bottom out.
Okay. Amrish, let me just ask you once again about the way some of the financial names have really, come down heavily today. Again, I'm talking about the asset managers as well as some of the financiers like Bajaj Finance. Now, in this basket, would you use this decline to buy anything specific, or would you stay away for the time being?
I think I'll stay away. I mean, especially the NBFCs, I've been saying for quite a while, especially the last 6-7 months, that we have seen a good move. And like going ahead, because of competition, you'll see asset quality declining. And the sort of, the valuations they have enjoyed and the expectation from the analysts were going up. So because of which, whenever we see a decline, we'll see a very sharp decline. So it is always better to sell on the way up. This is what I've been saying for a while. But at the same time, I was quite bullish on the PSU banks, but surely did not expect this merger news to come, which just came in the last 2 days, and that has taken the wind off in the PSU banking space also. So I think possibly it's time to just stay out and watch the markets for a while, not really start. One should not be buying in this decline. At the moment, I think it's better to just wait and watch. Let us see as to where the oil prices stabilize. Let us see as to where the rupee stabilizes, and I think only after that one should take a call.
Okay, all right, Amrish, let's see when that stability actually returns to our market. As of now, it's been another weak afternoon of trade. Thank you very much for being with us, joining us on the show. Let's get you another opinion, and this time it's an institutional one. We caught up with Pankaj Tibrewal from Kotak Mutual Fund to find out if he's willing to buy stocks in this fall. Take a look.
Market are at a very interesting juncture today, and there is a tug of war going between the macro concerns and the micro improvement. And clearly at the moment, macro concerns are taking an upper hand. Clearly, if you look at our view over the next 6 to 8 months, we believe markets are likely to be volatile.
SEBI has once again cut the mutual fund fees, and a lot of brokerages are talking about how the sectoral earnings could get impacted by at least 25% odd. Your own thoughts on how to approach this space?
If you look at from an overall growth perspective, this industry has a lot of leg from growth perspective. Today we are about 13% of GDP to AUM. Globally, if you look at it, it's about 60-65%. So we have a long way to cover out there. But any verdict by the regulator is most welcome, and we would take all steps to comply with it in the respectable time period.
But it would impact earnings significantly, wouldn't it?
So it would depend on how each of the AMCs take it forward from there, how much they absorb, how much they pass it on to the distribution. It would be really the strategy of each and every individual AMC, which probably we may not be able to comment at the moment right now.
Would you be a bit cautious on some of these consumer durable names, some of the auto names ahead of the festive season, or you think it's going to be smooth this time?
If you look at the overall consumption basket, I think staples have done extremely well, and so is discretionary over the last couple of years. And in our view, if you take a slightly longer term view, consumer discretionary is where we believe that as the per capita GDP increases, that basket is likely to see traction.
NBFCs, is the big move over now, well and truly over, or you think this is a good entry opportunity?
We have been cautious on the NBFC space. We believe that the NBFC which are more exposed to LAP, which is loan against property, are the ones to watch out for. We remain cautious on this space, and we are very selective on owning retail-oriented NBFCs only, where liability is good and asset quality is not an issue.
What about the old theme, Pankaj, housing?
If you look at this space, which is housing, I think this is one area where over the next 3 to 4 years you would see massive consolidation. We are started to look at this space more from a constructive angle, and we believe that 2 or 3 players can really create wealth in this space over a longer period of time. Also, if you look at from a cement demand despite of real estate being down has surprised everybody, with the volume digit growth being in double digits. And if you slightly dig deeper into that, the Pradhan Mantri Awas Yojana has been a massive hit in rural areas.
In most of the funds, you don't have too many pharma names. Have you missed out on this move, or have you consciously stayed away?
So in pharma, we believe that you have to be very stock specific. We don't believe that the generic price erosion is still over. And also people are kind of comparing pharma with what we saw in IT. But don't forget that when owning IT at the start of the year, the valuations were far more reasonable than what it is in pharma today. The entry multiples in pharma is not as cheap as it was in IT when we started the year. We have selective exposure to pharma in many of our funds and different pharma stocks. Some are exposed to the domestic market and some are exposed to the US generic market.
Generally, do you think the mid-cap space has completed its underperformance after that massive outperformance last year? Is it giving you a feeling that you can pick more winners in the mid-cap space than large-cap space for the next 12 months?
We believe that valuations have become far more reasonable than what it was 7-8 months back. It's very difficult to get the bottom in every stock. So we believe that over the next 6 to 8 months, the correction in the market should be used to own good quality mid-cap companies.
Well, it's pretty much all-round weakness today. You can't squarely blame it on the financials and banks or on NBFCs or even on consumer stocks, because all of them are participating on the way down. Sudeep Bandyopadhyay is with us on this leg of the show. Good afternoon, Sudeep. I'm just trying to sort of look at the way some of these larger financial names have been falling. Bajaj Finance, Bajaj Finance, IndusInd Bank for that matter. Would you be a buyer? I'm talking about the large nifty financials at the moment.
Well, Survi, good afternoon. Definitely, the markets haven't been kind in the recent past. While the NBFCs overall, we still believe that it's pretty attractive if you have a slightly longer term view. But I think at this stage, you have to be a little careful. NBFCs who have large exposure to real estate, I think definitely should be avoided at this stage. Even housing finance companies, I would be a little cautious at this stage, because many of them have loan against property exposure. So, but however, I'll be by and large comfortable with the retail NBFCs. So Bajaj Finance definitely looks good after correction. Well, whether I'll buy today, I'm not sure. Probably I'll wait and watch. And I will try and buy Bajaj Finance at some stage, definitely. If somebody has 1 year plus time horizon, definitely looks good. I will also like to mention Surabhi Capital First. I think they have done pretty well over the last few months. The merger announcement, there was some correction. but I think the merger is almost through. They have got most of the clearances, and they have improved the book consistently. Their focus gradually has shifted more and more to retail, which is good. So I think at current valuation, I'll be a buyer in Capital First. I'll watch Bajaj Finance, and at an appropriate time, I'll also like to buy Bajaj Finance.
Okay, the stock of the moment, by the way, is Titan, and it's just telling you perhaps the downgrade came a bit too late from the low point. Of course, quite a bit of recovery that you have right now on the stock, ending at the highest point. Sudeep, hi, good afternoon. Your thoughts on Titan?
Hi, Anuj. In fact, I don't agree with the downgrade. I have been kind of reasonably bullish on Titan. Of course, post-correction, it does look very attractive. While CLSA has been talking about a muted growth, the management has clearly hinted that they are expecting 25% plus growth in the jewelry business, going forward. The festive season is round the corner. The marriage season is round the corner. So I really don't understand the pessimism at this valuation. People were buying at 900 and now it's kind of corrected significantly. So, if somebody has a 1 year plus time horizon, I think Titan is definitely a good buy. Also remember the other businesses of Titan have started performing well, and overall it's a must have in somebody's portfolio. Probably you will not get an opportunity to acquire Titan at this valuation later on.
Ashwani, your thoughts on Titan? Today has been rather interesting. It started 4% lower. It's actually ending in the green.
See, right now is not a good time to do major buying in any stock because, things are changing very quickly. At best, you can say it is hanging around the lower end of the range, but there's a very clear, head and shoulder topping out pattern. So you maybe want to wait it out a bit and wait for the market to stabilize, because whether consumption gets impacted, does not get impacted, that's tough to say. In a market that's going down, look for ideas which are going down. These odd, one-off moves can happen basically anywhere.
This recovery of sorts, at least the little bits of it that we've seen, it's led to some sort of an upswing again in some of the sugar stocks. There are names like Granules, for that matter. We've discussed Titan already. Just your thoughts on this very volatile move that we've seen on sugar, Sudeep. Would you look at buying any of the bigger names like Balrampur Chini?
Well, unfortunately, Survi, I will definitely not look at sugar yet. Look, I think sugar cycle is at such a stage that, probably it's very close to its bottom. And somewhere it will start its recovery. And I'm talking about not only sugar in India, but globally. But one is, not really sure whether the bottom has been reached or not. Also remember, we are heading into elections, both multiple states as well as central. It's also very politically sensitive. So at this stage, I think I'll stay away from the sugar companies. Yes, it's close to its bottom, but probably one needs to be cautious still.
Okay, just about 4 minutes left for markets to close. Ashwani, what's the verdict now? On the Nifty Bank, we are at 26,280. The 200-day moving average is 26,100. Very close to 200 DMA.
Come again?
The Bank Nifty view, Ashwani, 26,280 is what we have right now. Just looking at the 200-day moving average, I think we are pretty close to that. It's 26,100, the 200-day moving average.
Well, if HDFC Bank cannot hold its 200 DMA, IndusInd cannot hold it, I don't think the Bank Nifty is likely to hold it. And this whole issue is not about the 200 DMA. If our macros worsen, we will pierce through all kinds of 200 DMAs. So we are basically linked to some other outside criteria. So let's not, go by the conventional sort of wisdom where it's a support resistance type market. I mean, if things keep on getting worse, chances are we will go through the 200 DMA on both Nifty and Bank Nifty. Why only Bank Nifty?
Okay, all right, that point of caution is well taken, Ashwani. I think it's about time, let's just wrap things up because we've got 2.5 minutes left for the day to end. Anuj, I don't know how much heart the bulls can take from the fact that at least 11,200 didn't go, but then as Ashwani has been saying, you've been discussing, that maybe at this point in time, just pure absolute numerical levels don't mean much.
Yeah, and I think now people would say perhaps it was a good problem that we had at least 7 or 8 stocks which were doing well. The way big stocks are selling off, HDFC Bank below its 200-day moving average, Bajaj Finance and Finserv, this kind of selling happens to be when 2 or 3 large institutions who are taking money off. It just doesn't look like a normal correction to me on the big stocks like Bajaj Finance, Bajaj Finserv. We spoke about HDFC Bank. I think it was 10 or 15 days back we were discussing HDFC Bank and the ADR move which had preceded the stock move here. So obviously there's been some kind of problem from the FI side. Having said all of that, perhaps this is one opportunity for investors in all these big names which are now correcting about 10, 15, 20%. Anecdotally, if you buy into these stocks, and purely by anecdotal evidence, if you buy into these stocks at 15% correction, if you're an investor, that turns out to be a great buying opportunity 2 or 3 years from the point that you buy. But that's, of course, putting the anecdotal data in place. Near-term texture for these stocks is weak. Absolutely no doubt about that. In fact, the Nifty is going home with a fresh low in terms of the recent move. 11,236 is where we are closing. And the Bank Nifty is now within 200 points of its 200-day moving average. In terms of losers, you had the Bajaj Finance stocks once again. The Bajaj Finance and Finserv twins down about 3%. HDFC twins, both of them were down about 1.5%. Maruti, the selling is relentless in Maruti. 2.5% lower is what you have on that stock. In fact, getting within, excuse me, 600 rupees now of its 52-week low. This is quite interesting. IndusInd was down. ITC and Lever were also down. On the way up, Coal India, GAIL, BPCL, ONGC, Tech Mahindra. The problem is these stocks don't count for much as far as the index weight is concerned. Perhaps a Kotak did well for the bulls, but that's it, Surabhi.
On the mid-cap side, well, things are a little worse off, Anuj, I can say that. Yes, the index recovered quite a bit from the lows of the day, but nonetheless, I mean, the way stocks have fallen, the asset managers obviously are a huge issue as we started off because of the SEBI changes that have been announced. So as we are closing down the day, Reliance Nippon losing about 12 to 13%. We've got HDFC AMC down by about 8.5% or so. So big cuts on these stocks coming through. Reliance Capital, Reliance Communication, by the way. So the entire ADAG pack has been on the weak side, including Reliance Infra, which is down 9.5%. There's been weakness in a couple of the PSU names, PSU banking names like UCO, Vijaya Bank. These are stocks on the way down today. Jet Airways has sold off almost 5%. We've just had some reports coming in from the sister channel about issues with respect to fresh lending from banks. Weakness on the consumer complex as well on a day like today. So Godrej Consumer, Jubilant Food, these stocks have lost between 3 and 4%. Long list of losers, actually. I could go on the financials. Edelweiss, L&T Financial Holdings, ICICI Pru. These are more of the names on the way down. Voltas among the big stocks can also be perhaps counted in. So, I mean, really an all-round weekday. Count in of Pfizer, some of the big MNC pharma plays that have done really well in the past. Money's coming off on a stock like Pfizer as well today. On the gaining side, there's not too much to speak of. There's a bit of a sugar play that was back in the market. So a couple of the sugar names were on the upside. Aside of that, maybe some recovery on something like a Union Bank, Bajaj Hindustan. But really, the gainers are, pretty small stocks, Anuj, I guess, because the bulk of the mid-cap market was also reeling under stress today.
Now, I'll tell you something. Today, if you're looking at purely the Nifty, the Nifty advanced decline survey is 25-25. 25 Nifty stocks ended in green, 25 Nifty stocks ended in red, but we are still down about 0.5% on the Nifty. That's telling you the other story for this market, which is that the influential stocks really are letting the market down right now. The likes of HDFC Twins, Maruti, ITC, Lever, and that's been the problem. Let's take some more thoughts then. Mitesh, what would be your call on the index now for Friday?
I think for me, the Bank Nifty remains the cause of worry. You were highlighting it's close to the 200 average. The structure is extremely weak. There's some pivot support historical charge. If you look at around the 26,200, 160 zone, but I think eventually it will give away. So I think next week, if you're talking about, I think maybe we'll get one bounce back from levels close to 26,200, but I think that will get sold into, and eventually we will head towards 25,800 as we approach the expiry, or maybe in the first week of October. So broadly still we will be trading with more of short bias, I think, on the bank Nifty, and correspondingly I think Nifty, if it breaks 11,200, 190 zones, then I think 11,070 or 11,065 could be tested on the downside.
Okay, all right. And Sudeep, final thoughts with you as well. I know it's a little tough to start buying when the market's falling the way it is here. But if there's anything on your shopping list, do share it with us.
Well, Survi, I think, I've been looking at Hero MotoCorp for quite some time. And I think, in spite of all this correction, it hasn't corrected too much. We all know about their strong strength in the rural markets. We know a lot of money is going and will continue to go for the next 1.5 years on account of elections and multiple other things. Monsoon was decent. So they are going to have a very strong demand pipeline and good sales numbers for the next 6 months. That's our belief. And at current level, Hero MotoCorp definitely looks good. So somebody who has about a year's time frame should buy with 3,800 as a target for Hero MotoCorp.
The JP Morgan in their investor summit throughout the course of the day. Well, a while back, I caught up with Latika Chopra, who tracks staples as well as retail companies in India. Here's the conversation with her. Latika does say that at least in the near term, perhaps there could be a bit of a shift in preference towards consumer discretionaries over staples. Take a look.
Valuations for the sector have expanded meaningfully over the last couple of years. I think what was more stark was that over the last 3 months, the rally in the consumer stocks was pretty steep, and probably we are seeing some normalization happening now. I don't think there is any major change in the business models of the large companies per se, but probably it's more investors looking at more rational valuation metrics today. And if you look at the valuations at which the staple sector trades, it's at 2 to 3 standard deviations above historical means, and it is expensive at maybe all-time premiums versus the market versus global staple companies. So clearly there is a bit of probably froth which was sitting, and it's corrected a bit. I think another important aspect that you need to look is that there is a lot of differentiation between the companies which have delivered very good earnings growth, which have very strong moats, which have done actually very well, and then there are a few laggards in the space. My view is that companies who keep on delivering on the earnings growth expectations, or where we actually see earnings surprises, probably will continue to command premium valuations. And if we see any kind of disappointments versus the expectations, there is a case for some bit of valuation correction or a time correction. From a 3 to 5 year perspective, though, I feel that it's still good to be invested in good business models, and staple space per se has strong, good, medium to long-term growth prospects. There are a lot of enablers. Demographics is talked a lot about. Urbanization is talked a lot about. Premiumization is another trend which is pretty secular in nature. And clearly these business models come with a very high return profile. So I guess the premium valuation, premium multiples to markets will probably sustain. Yes, they may, keep moving up and down depending on, obviously the kind of liquidity we see in the market from a macro perspective, plus of course how the companies end up behaving in terms of growth profile.
Sure. So that's in the longer term. In the slightly more near term, is there some sort of threat to immediate earnings? Because what happened was last quarter was a great quarter because we were at a low base. Now, as some of these anomalies, GST, etc., start settling down, is there a risk to the kind of volume growth we'll see towards the end of this year and maybe beginning of next year?
See, obviously the base case that I think we all are working with is improvement in demand, and clearly over the last 2-3 quarters we had seen most consumer companies reporting improving growth trends, and that's partly aided by the fact that distribution channels are normalizing after the disruption we saw on account of GST and prior to that demonetization. And the second bit that is working is the improvement in rural sentiment. Now, the way I view it is that the rural recovery is still very nascent, is still very fragile. I think we still need more data points and few more quarters of consistent delivery to say that, it's truly there and it's more sustainable. Though the data points or the enablers that we are seeing on what the companies are talking about from a government support perspective, MSP increases, we are heading into election-heavy calendar, seems to suggest that, the rural growth momentum will probably continue to remain healthy for a few more quarters to come for sure. And then of course we have to see how dynamics emerge. The risk that probably we need to be cognizant, I think probably is more on account of inflation, which is trending up. A lot of raw material prices for FMCG companies are trending up. Currency is adverse, crude is adverse. And we've already started to see companies looking to pass it on to consumers. So last 3 to 6 months, there have been tremendous amount of price increases that we've seen in the sector. These are not very large price hikes, mostly varies between 2 to 5%. And remember, these are coming back after the GST-induced rate reductions that we saw the past year of almost 10% across most categories, right? So it's not going to pinch the consumer immediately. So I think the impact of that inflation, one, it is still very minimal. It's not going to be necessarily very huge in terms of volume impact in the immediate term. But yes, if we continue to face steep inflationary pressures on cost, I think then the ability to take pricing, immediately might not necessarily be there, and then poses some downside risks to your margin expansion momentum that you have built. Yes.
Well, that of course is conversations coming in from JP Morgan, but we also spoke to Sunil Garg earlier in the day on the sidelines of the JP Morgan summit, and listen into this slice of conversation with him as well.
It's been a pretty rocky last few months for emerging markets. In fact, I think emerging markets since the peak in February are down nearly a quarter, and currency is playing a big role. It clearly is some cause for concern because we've lowered our estimates in terms of target price for MSCI Emerging Market Index and also some of the EPS numbers. But the fact remains that emerging markets are very cheap, and in fact they're trading at a much wider discount to historical averages, and that at least provides a value floor in emerging markets. So overall we are positive. I think the big driver here, it's going to be China, because China has been a massive underperformer. So it's not just some of the Latin American currencies that have been weak, but it's China's equity market that has been dragging down EM performance.
You said you've lowered your MSCI Emerging Market Index target. How much have you lowered it to? And what's your view on MSCI India? How do you see it shape up over the next, say, 6 to 12 months?
So our MSCI Emerging Market Index, we've lowered it by about 8%. So 1130 is our target versus where we were about 1230 earlier. We do have some reason for caution. First of all, we've had a very strong performance from here. I think in terms of where our Nifty targets are, it's probably a relatively modest upside at this point in time. And we think the consensus earnings estimates are probably a bit too rich. They're about somewhere between 21 and 25% for either MSCI India or Nifty, and we think it's going to be closer to 15%.
For Indian market, there's been two legs of a big bull market. There's consumption and the companies that finance that consumption, and both have seen quite a bit of correction over the last few weeks. You reckon they could correct more from here?
So look, I think financials are still not a very attractive sector in the Indian market at the moment. In fact, I think financials have struggled pretty much everywhere globally, even in developed markets, and that's not one of our preferred sectors. I think there's probably interesting opportunities in sectors like healthcare. Now, that may not necessarily be a domestic consumption story, but that's also been a very large underperformer if you take a one-year context, and I think that looks like one of the better opportunities at the moment.
Okay. Sunil, more particularly in India, we have seen a very sharp rise in bond yields to about 8.2%, the Indian 10-year, at least 50 basis points higher than what it was a month ago. How much worse does the cost of capital get, and will that add fresh reverses to the financial sector?
We actually think that higher bond yields are a sign of confidence, and typically, historically, and particularly in developed markets, they've been associated with better equity markets rather than the other way around. So in some senses, we are seeing a interest raising cycle pretty much everywhere. Yes, it does raise the cost of capital, but if it is accompanied with a better growth outlook, then I think that's net-net a better outcome.
What about flows, Sunil? In your interaction with foreign investors, how is the mood with respect to investing into India now, especially considering the way the rupee has moved? Would you expect more redemptions from FIIs?
Overall, emerging market positioning at the moment is light. And I think India is, as I again mentioned earlier, has been one of the stronger outperformers. So, you know, there's clearly a possibility that as investors get more comfortable with emerging markets, it rotates into markets that have massively underperformed. And that would be places like China and some of the CEMEA and the Latin American markets.
There have been a lot of downgrades that we've seen in India of late, and in fact the FII holdings into India is also down from an all-time high. JP Morgan is still relatively bullish. Why is that?
Our index target has about 7-8% upside. Now, is that, you know, ultra bullish over a 9-month period? I think it's not a bearish view. But I think the markets, you know, got a bit of a, I would say, volatile time ahead. I think you've also got an election year, which poses some headwinds. So I think relative to other emerging markets, there are headwinds that we're seeing here. We're not bearish on India, but I think the index, having delivered such strong performance at the aggregate level, is probably going to struggle a bit from here.
Well, the share registry can now be based on blockchain as it's formally launched by Grex at an event at NSE today. Shankar Banerjee is Chief Technology Officer at NSE, and he joins us on the show with his sense on where the markets really could be moving. Mr. Banerjee, hi, I really appreciate you taking time out for us today. First of all, what is your sense as we are looking at newer technologies and a stockchain kind of a platform comes in for unlisted companies? Where do you see the road ahead?
Hi, Manisha. I'm personally fairly excited because, you know, one of the biggest challenges unlisted companies have is that since they don't have the same levels of transparency and operational efficiency as listed companies do on exchanges, for them fundraising, price discovery, all that becomes very difficult. And traditionally, it's been very expensive to do the transparency kinds of things. It was very manual. It involved people and verifying paperwork. And so it wasn't really feasible to do it for smaller companies. But today with technology, we can offer this transparency to pretty much any company that wants it. And therefore, I think it's a good start. I think that it will become a vehicle for companies to become serious about raising money and becoming public at some point.
How are these kind of technologies taken globally? And is there any learning that we have taken in from the global markets on this one?
Many companies, the US, Estonia, a few other countries like that have experimented with this. The technology seems to be mature enough. The challenge, as always, is adoption. You have to persuade companies to adopt it. You have to persuade regulators to look at it in the right way. So wherever you have friendly regulators who are willing to experiment, wherever you have companies that are willing to take the risk, there it has taken traction. But there are other places where it hasn't really caught on. So that's the scenario. I think that will be everywhere.
What is the general feedback really around? I mean, we have seen the first ever launch of stockchain kind of a company happen today. What is the road ahead from here? What are the pros, cons, challenges, opportunities that you see with this coming on platform?
See, I personally think that this is the way to go. Eventually, the traditional way of verifying companies, putting things on electronic depositories, the way we do it today, is going to evolve into the stockchain kind of model. The stockchain themselves survive or not is a different question. The challenge is how soon that evolution happens. Is it too early in the game? Is it too late in the game? The best way is when we are at the right time. There is also the psychological business of adoption. Are companies willing to, a certain minimum mass of companies have to be willing to adopt a particular technology for it to take off. So those are the challenges we'll face. I think the technology has, by and large, already independently matured to the point where we are relatively confident of the size, scale, problems with it. Now, the business processes, however, have to mature. What requires what kind of checks and balances, what requires what kind of refinement, that still has to mature to the point where it becomes a full-scale production system.
Mr. Banerjee, also, the other thing really is about a general adaptation of this or coming to age of this, would you say that, as you rightly pointed out, it really will have to be the exchanges, the regulator, which have to take headway, into this to ensure that the general public at large or companies at large start trusting this, start seeing credibility into this?
Yes, I don't think so. And I think the Indian ecosystem is actually quite active in this. The regulators are active in experimenting, in discussing. We've created working groups across the capital market to discuss these points. So there is a lot of activity, and I think it's definitely on the road ahead.
One final question, and we'll let you go, Mr. Banerjee. And this really is about the road ahead. How soon, how much of an inclusive, technology do you see for the days to come now? As you said, I mean, much it really is into depositories, and a lot of shares are dematerialized in that sense. How would you look at a marriage between the two?
So eventually, I mean, this being the capital markets, depositories have been part of this discussion for a while. I think the role of depositories will change. The role of the exchanges will change. We will be able to offer listing and transparency and market price discovery to a much broader range of asset classes than we do today. Today, we offer this very effectively, but to a fairly narrow range, to a very small number of companies that fit a certain set of criteria. Given this technological advance and given the evolution of these services, we should be able to offer the good parts of these services to a much broader range of technologies.
Well, absolutely. Your point is well taken, Mr. Banerjee, and really appreciate you taking your time out. So that really is the first of its kind, a stock chain that has been basically underlining blockchain that has been launched at an event at NSE today. Manish Kumar of Grex and Saustav Chakrabarti, Executive Director, CEO at Quotient Digital as well, joined us on the show. They were a part of this launch today. Manish, to you first, what is a stock chain and what really are the legal regulatory standing of this as of now?
Yeah, so the underlying technology is, Hyperledger based technology that we have deployed today. And, the host of benefits that, accrue from blockchain to companies, number one has been, that the companies will get little more hassle-free from the challenges that, their record keeping poses to them. If you ask any entrepreneur, it is very difficult for them to really keep a tab on what was happening with their registry records and compliance records, etc., and and it is very cumbersome to maintain in Excel sheets, etc. So that is where blockchain really comes in, keeps it in a digital registry and keeps it on blockchain. So there is a lot of trust that they can exuberate when they maintain it through blockchain based framework.
Manish, how many companies are part of blockchain as of now, and what is the road ahead you see for the company?
Yeah, so there are a few companies who have been, in the process to actually register and deploy their data on blockchain. Today was the first, in some sense, benign beginning where, one of the first companies did that in front of, many financial institutions being represented at the NSE. This marks, in some sense, a historic beginning of a new kind, where which will spring up now a lot of possibilities for tomorrow, where you don't need to reconcile many things, and there would be single source of truth for these records.
Well, absolutely. So, getting you in the conversation as well, you're one of the companies who've joined blockchain today. Tell us on how you expect blockchain to help companies like yours.
Broadly, I think it makes two fundamental big changes for us. One is on transparency and the other is on compliance. Often a lot of investors ask us questions where we do falter on the transparency aspect, because whatever we do at the end of the day, there is no independent third party who can validate whatever we are talking about in terms of our share register or in terms of how many investors there are, what kind of holdings they have. Blockchain is a remarkable progress in that direction, and I think it will definitely impact us very positively with respect to demonstrating where we stand and getting it validated independently.
How will it make easier for companies to raise capital, and what is the road ahead that you see now with this advent?
It will definitely make it much easier because now investors can independently validate our claims and our financial position. Also on the compliance side, often we as founders spend a lot of time getting involved on the compliance side, and we are at the mercy of professionals. Stockchain will also ensure that the professionals also adhere to the regulations and to the norms, and they do not do something which can adversely impact the company in the long run.